Hi everyone, Donna here with Bookkeeping Made Simple. I am going to talk about a subject I have been trying to talk about for weeks now, and that is the demise of FTX and what that means for your business. So there's a lot of things that I want to cover before I get started. As always, if you enjoy these videos, please like, share, and subscribe. That's how I grow my channel. I really appreciate my viewers and listeners who take the time to comment, let me know what they're interested in hearing. Helps a ton. So with that said, let's just dive right in. It's like watching a train wreck. I swear. So if you've been watching the implosion of FTX, if you have logged into your crypto account, even with a different fund, and you've noticed that crypto has dropped like a rock, this is the video for you. We're going to talk about this. We're going to talk about this in the in terms of what it means for small business owners, because this is going to change things. As the information starts to roll into the courts, the question on everyone's mind seems to be, how did this happen? How did Sam Bankman-Fried manage to embezzle over $8 billion of customer funds? And that is what he did. That's the question John J. Ray III, who's the new CEO overseeing the restructuring, has been asking. Now, Mr. Ray's experience is in recovering funds from failed corporations, including Fruit of the Loom, which he was able to restructure and bring back, Residential Capital, and most famously, Enron. You may have heard of them. This man understands accounting and he understands the importance of record keeping. Now, I haven't decided whether SBF just doesn't understand it, and a lot of business owners don't see the value in it, or if he understands how critical record keeping is and failed to keep records on purpose. It's kind of a toss-up. John Ray stated, and I quote, "Never in my career have I seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. From compromised systems integrity and faulty regulatory oversight abroad, to the concentration of control in the hands of a very small group of inexperienced, unsophisticated, and potentially compromised individuals, this situation is unprecedented." Corporate controls can't fail, I suppose, if they were never there. When there are no controls or systematized record keeping, the opportunity for fraud just goes right through the roof. The point of having good records and controls is to ensure business is run in the most effective, orderly, and accurate fashion possible. Now, some of the most common internal controls include segregation of duties. A common one would be having one person prepare checks to go out and another person sign and authorize them. When you divide duties between people, it reduces the risk of mistakes or fraud. For one thing, they have to collude between each other to commit fraud, and that all by itself reduces the risk. Physical controls. I've seen businesses leave the petty cash box or inventory storage areas open to all employees. Access to these areas should be restricted. Petty cash should be counted and reconciled with any receipts, both incoming and outgoing, daily. And I do mean daily. If you have petty cash and you have employees that are able to access it, then that should be counted every single day, even if you don't think that you used it. It still should be counted and accounted for. Reconciliations. This is the second company that I have come across just glancing through financial news in the past couple of years. The most basic things that are accounting 101 have just been completely and utterly overlooked, and bank reconciliations is at the top of the list. Yes, I know most of this is done electronically. A lot of companies don't even write checks. It's all sent electronically, but you still have to reconcile your bank account once a month when your bank statement comes out. This, by the way, is my big beef with Zero. They want to reconcile every day. That's not how it works. We reconcile your books monthly. We check your balances, your outstanding transactions against the monthly bank statement. We can verify what your balances should be according to the bank versus what they're showing in QuickBooks. We can see if there's any duplicate transactions or if there's deposits that should have been made that weren't. We can catch duplicate transactions do occasionally get past the bank. We can catch them. This is the very first thing I learned in accounting in 1981, which really is dating me. You reconcile your bank account. I don't know how people don't know this. I have known to do this since I was in high school. I learned it, believe it or not, I learned it in high school. You reconcile your bank account. You add up what the bank says went through. You add up what you say should have gone through but hasn't yet. Back in the day, it was outstanding checks. Today, it might be deposits that haven't posted. You match all that up, and then you know exactly what's in the bank account. I think a lot of people in his generation just go with, well, everything's going through the bank automatically, and we can just download the bank feeds once a day, and that's sufficient. It's not. You still have to reconcile your bank account the old-fashioned way. Really, really, really critical. Wirecard was the other one that had a Big Four accounting company doing her audits. They didn't even pull the bank statements to verify the balances. It baffles me. Reviews. We offer all of our clients a quarterly review of their books, which is provided by someone other than the head bookkeeper on the project. So if Ruth Ann is your bookkeeper, I will do the review. If I'm the bookkeeper, I will have someone else do a review just to go over everything. This gives a manager or a more experienced accountant a chance to review the balance sheet for any discrepancies. Also to audit COGS for our retail and e-commerce accounts. We want to make sure that the cost of goods per unit is correct, especially for our e-commerce accounts. We want to discuss any upcoming goals for the business. A huge example that I've gone through a few times now has been the potential sale of the business. That's going to impact how we report transactions. Do we need to report them as if they're accrual, or is it okay to leave them as cash? How closely do we need to follow GAAP? What are the business brokers looking for? We need to know all of that. And we also need to be able to talk to our clients frequently throughout the year about tax saving strategies. So if there's something coming up in the business, if you think you might be putting your business on the market, request a quarterly review. We want to look over that with you and then see what needs to change. What are your brokers looking for? And we also want to make sure that you pay as little in income tax as is legally required. Information controls. This is another one. I've seen so many businesses just not do this. This control helps ensure that an entity's financial data is secure, accurate, complete, and appropriately authorized. Getting authorization through Slack is not appropriate. There should have been a form that was filled out that could be stored somewhere on the servers that could be. This is how FTX is doing it. They were literally authorizing expenditures through Slack. That is not the appropriate way to do that. It should be a form that has to be signed, everybody involved. And it means that company data should be safeguarded. We safeguard our clients' company data by only allowing the bookkeepers working on their accounts to have access to that. We secure all of our emails. That was one of the things I was just completely baffled about, was they were using just completely unsecured emails to no. I'm just, the more I hear about what they've done, the more baffled I am. Not everyone in a firm has access to financial records. Nobody, by the way, in my firm has access to my financial records but me, because no one else needs to see them. I do the accounting. I trust myself. I can verify what I did. And I have a lot of experience doing it. But if I were to have one of the bookkeepers do it, they would be the only ones. It just wouldn't be everybody in the company, even though we're an accounting services company. It wouldn't be everybody in the company. It would be specific people. Here's some other things that really just went crazy. So none of these controls were present in FTX and Alameda's books. One, the two entities were basically treated as one in their accounting records. So there was no, this is Alameda's books, this is FTX's books, and honestly, never the twain should have met. There should have been controls for loaning money back and forth between the companies, which is perfectly okay to do, but you have to have the controls. Authorization for spending was done through Slack messages. No bank reconciliations were done, not of customer accounts, not of corporate bank accounts. Very few records were kept of funds transferring back and forth between Alameda and FTX. There was no list of bank accounts signatories. That should have been in QuickBooks. They were using QuickBooks. There was no governance between Alameda and FTX. They were using each other basically as an ATM. And they both had external investors. So these investors are left holding the bag. Software was used to cover up the misuse of customer funds. There should never even be an issue about the use of customer funds. This shouldn't even be a question. This is just baffling to me. And an unsecured group email account was used to access private confidential keys. On top of everything else, like I said, they were using QuickBooks Online as the accounting tool of choice. Now, I love QuickBooks. I started out hating QuickBooks Online. They've improved it a lot. I love it now. All of my clients use it. It is the best tool out there for small to medium-sized businesses. Not FreshBooks, not Xero, not Zoho Books, not any of the other freemium books. QuickBooks Online is the best tool for small to medium-sized businesses. It is great for companies with one or a few owners. It is not great for companies that need to have these level of controls involved. So FTX should have been using Sage Intacct, which I have used, I am familiar with, and it is perfect for a business this size. It is good for funds accounting. Simply the fact that they used QuickBooks Online isn't by itself a cause for concern in a company this size, but combined with everything else, in the hands of an inexperienced or incompetent or just plain fraudulent leadership team, and without appropriate controls, it was a disaster looking for a place to happen. I really hate throwing QuickBooks under the bus, but the controls weren't in place, and QuickBooks was not the right tool for this particular business. So with all that said, if you are concerned about uncovering fraud, embezzlement, misuse of funds in your company, give us a call. Our number is 801-692-0032, and we will see how we can help your business grow and thrive. Thanks for talking, and I will talk to you soon.